Let me ask you something. It's a simple question, but one that has the power to reframe how you see the world and your place in it. It's about timing, it's about courage, and it's about recognizing patterns that most people only see in hindsight. We often look back at pivotal moments in history and think, if only I had known. But what if the signs were there all along? What if the greatest opportunities weren't hidden in complex algorithms, but in plain sight, disguised as uncertainty and fear? I want you to take a moment and genuinely consider this. Don't just hear the words, visualize the possibilities. If you had invested in America would your life look different today? Think about it. In 1982, the economy was just emerging from a painful recession. Inflation was high, unemployment was in the double digits, and the prevailing mood was one of deep pessimism. Yet, that was the exact moment the starting gun fired for a 2-decade-long bull market, fueled by the personal computer revolution that would create unprecedented wealth. Then, picture 2009. The world was reeling from the global financial crisis. Banks were collapsing, headlines screamed of a second Great Depression, and the stock market had been decimated. It felt like the end of the financial world as we knew it. But for those who saw the underlying strength of the American economy and invested when there was blood in the streets, the following decade delivered one of the most powerful market recoveries in history. And most recently, 2020. A global pandemic brought the world to a standstill. Fear was palpable. Supply chains broke, businesses shuttered, and the future seemed terrifyingly uncertain. Yet in that chaos, new industries were forged. Technology adoption accelerated at a breathtaking pace, and those who invested in the disruption, rather than running from it, were rewarded handsomely. In each case, the path to extraordinary returns wasn't paved with good news and certainty. It was carved through a landscape of fear. Because here's the truth. The biggest fortunes in history were built when... This isn't a coincidence. It's a fundamental law of markets. Value is created by solving problems, and the biggest problems emerge during times of crisis. When fear is high, assets become mispriced. Quality businesses, solid real estate, and innovative technologies are sold off indiscriminately alongside everything else. The headlines, driven by a 24-hour news cycle that thrives on panic, amplify this fear, creating a feedback loop of negativity. This is when the average person, guided by emotion, steps back. They wait for the uncertainty to pass. They wait for a clear, all-clear signal. But the hard truth is, by the time the headlines turn positive and the fear subsides, the opportunity has already vanished. The smart money, the disciplined capital, doesn't wait for the storm to pass. It learns to invest in the rain. It understands that the point of maximum pessimism is also the point of maximum opportunity. And right now, we are in one of those moments again. Look around. The narrative is one of division, inflation, geopolitical instability, and economic uncertainty. Many are predicting a slowdown, a recession, the end of an era of prosperity. The headlines are filled with reasons to be cautious, to pull back, to wait on the sidelines. And that is precisely why this moment is so critical. Because beneath the surface of that noise, a massive structural shift is underway. A great reshoring of capital and capability back to the United States. This is why the time to invest in America is now. Not in spite of the challenges you see, but because of them. These challenges are creating dislocations. They are creating once-in-a-generation buying opportunities in sectors that form the very backbone of our economy. While others are distracted by the political theater and the daily market fluctuations, a quiet, deliberate transfer of wealth is beginning. It's a move away from speculative high-flying assets and back to tangible, cash-flowing businesses and properties right here in the U.S. This isn't about blind patriotism. It's about a clear-eyed analysis of global capital flows, demographic trends, and technological innovation. America remains the world's largest consumer market, the home of its deepest capital markets, and the undisputed leader in the technologies that will define the next century. And if you stay with me for the next 30 minutes, I'm going to show you exactly where this opportunity lies and how you can position yourself to take advantage of it. This isn't a theoretical discussion. This is a practical roadmap. I'm going to pull back the curtain and show you why global capital is flowing back into the U.S. We'll look at the hard data on foreign direct investment and why the U.S. is seen as the ultimate safe haven for capital in a turbulent world. Why smart investors are quietly positioning. I'll reveal the sectors and asset classes that sophisticated family offices and private equity firms are targeting right now, while the mainstream media is looking elsewhere. Why hesitation will cost more than action. We'll analyze the cost of waiting for certainty and how the asymmetric risk-reward profile of today's market heavily favors the decisive. And how you can structure deals in today's market. I'll walk you through tangible strategies, from seller financing to equity partnerships, that allow you to control valuable assets with less capital than you think, turning the current economic climate into your single greatest advantage. The next decade of wealth will be built by those who understand this shift and act on it. The information I'm about to share with you is the result of thousands of hours of research and decades of experience. It's designed to give you the clarity and confidence to see the opportunity that's right in front of you. So, let's begin. Let's go. People love to bet against America, but for over 100 years, they've been wrong. The US still has. The world's largest economy, the world's strongest reserve currency, the deepest capital markets, the most innovative companies like Apple, Microsoft, Nvidia, Amazon. These aren't just companies, they are global infrastructure, and they were all built in America. Why? Because America is designed for risk, innovation, scale, capital efficiency, and when cycles reset, America rebounds first. Let's rewind. 2008, financial crisis. Real estate collapsed, markets crashed, banks failed. Everyone said America was finished. Then what happened? The S&P 500 went on one of the greatest bull runs in history. 2020 pandemic lockdowns, uncertainty, fear. What followed? Massive wealth creation. The pattern is simple. When pessimism peaks, valuations compress, liquidity tightens, that's when generational opportunity appears. Right now we have higher interest rates, market recalibration, capital discipline, business owners under pressure. That creates something powerful, leverage for investors. While media focuses on division, global capital is doing something else quietly. It's flowing into U.S. real estate, U.S. private equity, U.S. tech infrastructure, U.S. manufacturing. Why? Because compared to Europe's stagnation, emerging market volatility, political instability in parts of the world, America looks like stability, even when Americans feel uncertain. Globally, the U.S. still looks like the safest large-scale opportunity on Earth. The dollar remains dominant. The legal system is predictable. Property rights are strong. Capital markets are liquid. That combination is rare. Now let's talk strategy. General optimism is a starting point, but it's not a plan. A plan requires precision. It requires identifying specific, actionable opportunities where the risk-reward balance is skewed in your favor. Because investing in America is too broad. It's a sentiment, not a thesis. To generate real returns, you have to drill down past the headlines and find the pockets of the economy that are mispriced, misunderstood, or simply overlooked by the mainstream herd. The real opportunity right now, based on our analysis of deep structural trends, is concentrated in three core pillars. These aren't fleeting fads. They are multi-year shifts that create a powerful tailwind for savvy investors. The first is perhaps the most immediate and accessible. One distressed but viable businesses. We are in the early innings of the largest transfer of business ownership in history. Thousands of baby boomer-owned businesses are coming up for sale as their founders reach retirement age. Many of these are fantastic foundational businesses. They need simple, modern fixes. And because many of these owners are motivated to sell, and there's a limited pool of traditional buyers, they're often selling at 2 to 4x earnings in many sectors. Let's walk through a simple example. Imagine a local HVAC company. The owner is 68. The business generates $1 million in annual revenue and $200,000 in net profit. He's asking for 3 times earnings, so a $600,000 purchase price. A new owner comes in, builds a modern website with online booking, implements a digital marketing strategy, and upgrades the scheduling software. In year 1, revenue grows by 20% to $1.2 million. With operational efficiencies, net profit climbs to $300,000. The business is now more valuable, not because the market changed, but because the operations did. That's not hype, that's math. It's a repeatable playbook. Of course, diligence is critical, and not every business is a diamond in the rough. But the opportunity set is massive. 2. Commercial real estate reset. The second pillar is in an area many have written off: commercial real estate. It's true that rising interest rates caused significant pricing corrections across the board. Higher borrowing costs put pressure on property values, and headlines screamed about an impending crash. But not all real estate is equal. The narrative of a commercial real estate apocalypse is dangerously simplistic. It lumps everything together. While empty downtown office towers in some cities face genuine existential challenges, the smart money isn't looking there. It's watching specific, resilient sectors that are powered by durable economic trends. America still needs to build, power, and move things. That physical infrastructure is non-negotiable. Consider a small industrial warehouse near a growing city. Before the rate hikes, it might have sold for a 5% cap rate, meaning the annual net operating income was 5% of the purchase price. Today, due to market uncertainty, a similar property might trade at a 7% cap rate. For the same $100,000 in annual income, the price has dropped from $2 million to about $1.4 million. The asset is the same, the tenant is the same, the income is the same, but the entry price is significantly lower, creating a better long-term return profile for a new investor who can secure financing. This is about buying essential assets at a moment of peak pessimism. Infrastructure pays long-term, especially when you acquire it at a discount. 3. AI and advanced manufacturing. The third pillar is where technology meets the real economy. This isn't about chasing the latest consumer app. It's about investing in the companies building the foundational layers of America's future industrial and technological strength. We're focused on key areas. Look at how companies like NVIDIA exploded in value. It wasn't just hype, it happened once the market realized that every single company wanting to build AI models needed their hardware. The demand for the underlying infrastructure became undeniable. We see a similar pattern emerging in advanced manufacturing. For example, consider a private company that makes specialized robotic arms for semiconductor fabrication plants. For years, it was a niche, steady business. But now, with massive government and private investment pouring into building domestic chip fabs, their order book is exploding. An investment in that company isn't a bet on one chip designer. It's a bet on the entire reshoring trend. It's a picks and shovels play on a defining geopolitical and economic shift. This isn't hype, it's structural. These 3 pillars, distress small businesses, reset commercial real estate, and advanced manufacturing, represent distinct but complementary ways to invest in the core productive capacity of the U.S. economy. They offer a path to build wealth that is grounded in tangible assets and undeniable needs, far from the noise of day-to-day market speculation. Here's the psychological trap. When markets are calm, people feel safe investing. When markets are uncertain, people freeze. But wealth is built in uncertainty. The difference between the wealthy and everyone else is timing discipline. They invest when valuations are compressed, sellers are flexible, competition is low. And right now, competition is lower than it was 2 to 3 years ago. Deals are negotiable again, terms are flexible again. That window does not stay open forever. The deal structure advantage. This is where marketing power happens. Smart investors today are not just buying, they're structuring. Examples: seller financing, equity partnerships, revenue share deals, asset-backed positions, option structures. You don't need to deploy massive capital up front. You need intelligence, network, speed, and America rewards structure. This legal environment allows creative deal-making at scale. That is powerful. This moment favors international investors seeking dollar exposure, entrepreneurs wanting U.S. expansion, operators looking to acquire cash flow, funds raising capital for distressed plays, visionaries thinking 5-10 years ahead. If you are reactive, you'll wait. If you are strategic, you'll position. In 5 years, people will say, "I wish I invested in 2026." It's a phrase we hear all the time, a lament born from the clarity of hindsight. It echoes what people say today: "I wish I bought real estate in 2009," or "I wish I bought tech stocks in 2020." Why do they say this? Because looking back, the path seems so clear. The fear that paralyzed the market is forgotten, replaced by a simple, upward trending line on a chart. The noise of the moment, the daily headlines, the political drama, the expert predictions of doom, it all fades away. All that's left is the outcome. And from the safety of the future, that outcome looks inevitable. It looks obvious. But we aren't in the future. We are in the now. And right now, the path is anything but clear. Opportunity never feels obvious in the moment. It feels uncomfortable. It feels uncertain. It feels like you're taking a risk that everyone else is smart enough to avoid. This feeling, this deep-seated discomfort, is a powerful psychological barrier. Our brains are wired for certainty, for social proof. We want to move with the herd because, for millennia, that's what kept us safe. But in the world of investing and wealth creation, the herd is almost always late to the party. The greatest opportunities don't announce themselves with trumpets and a clear sky. They arrive in storms. They are cloaked in fear, doubt, and complexity. This is where the concept of asymmetry becomes critical. Asymmetry is the imbalance between potential upside and potential downside. It's the chance to risk $1 for the potential to make 10 or 50 or 100. And this kind of profound imbalance doesn't exist when things are easy and obvious. It's forged in the crucible of uncertainty. Discomfort is the price of admission for asymmetry, and right now, America remains the most asymmetric large economy on Earth. Why? Because its entire economic structure is built on a foundation of dynamic reinvention. It has the deepest, most liquid capital markets in the world, allowing capital to flow to new ideas faster than anywhere else. It has a culture of entrepreneurship that celebrates risk-taking. And it has a legal framework that, while complex, protects property and intellectual rights, giving innovators the confidence to build for the long term. This unique combination means that during periods of global stress, like the one we are in now, capital doesn't just flee, it seeks a haven that also offers growth. And that haven, time and time again, is the United States. While other economies might offer stability, America offers stability, the asymmetric upside of innovation and recovery. Let me leave you with this. 5 years from now, when the current anxieties are a distant memory and the economic landscape has shifted once again, people will look back at this window of time. They're going to say, "That was obvious." They'll see the demographic shifts, The technological platforms that were just emerging, the reset in asset prices. And with the benefit of seeing how it all played out, they'll say they should have invested. They should have moved. They should have structured those deals. But right now, it doesn't feel obvious. It feels uncertain. It feels risky. The headlines are filled with talk of inflation, geopolitical tension, and political division. It's easy to feel paralyzed, to wait for a clearer signal. But that's the hard truth. The clear signal is the sound of the opportunity disappearing. The moment everyone agrees that it's a good time to invest is the moment the asymmetry vanishes. The big returns have already been made. That's exactly why the opportunity exists. It is a direct consequence of the present uncertainty. The fear and hesitation of the many creates the potential for the few who are willing to see through the noise. This isn't a new story. It's the American story. America has gone through. Think about the dot-com bust, the 2008 financial crisis, the pandemic shutdown. Each was described in apocalyptic terms. Each felt like an existential threat at the time. And every single time, America rebuilt stronger. It adapted, it innovated, it didn't just recover, it reached new heights. The iconic companies that define our modern world were not born in times of placid comfort. They were forged in moments just like this. Companies like Apple, Microsoft, and Amazon were not built in comfort. They were built in conviction. Steve Jobs and Steve Wozniak founded Apple in the stagflation-plagued 1970s. Microsoft took its dominant position during the volatile 80s and 90s. Amazon was founded in 1994 and survived the dot-com apocalypse that wiped out so many of its peers because Jeff Bezos had a conviction that went far beyond the market sentiment of the day. Their founders didn't have a crystal ball. They had a thesis. They had a deep-seated belief in the value they were creating, and they had the courage to execute on that belief when others were running for the exits. That is the kind of conviction that is required right now. It's not about blind optimism. It's about doing the work, understanding the fundamentals, seeing the long-term trends through the short-term fog, and having the courage to act. It's about choosing to be the person who, 5 years from now, looks back not with regret, but with the quiet satisfaction of having made the right choice when it was hard. The choice is yours. If you got value from this, hit like, because that tells the algorithm this conversation matters. Drop a comment and tell me, are you looking at 1. Real estate, 2. Business acquisitions, 3. Private equity, 4. Tech, AI, 5. Cross-border investment? I personally read the comments, and your comment might spark the next deal. Share this video with an investor, an entrepreneur, a partner, someone sitting on the sidelines. Because the biggest regret in investing is not losing, it's never participating. If you're serious, if you're serious about structuring deals, entering the US market, raising capital, acquiring businesses, positioning before the next cycle expansion, there's a link below. Apply. Let's see if it makes sense to work together. We are actively structuring opportunities in this market, but we are selective. This next cycle will create new winners. The only question is, will you watch it happen, or will you be part of it? The time to invest in America is now. I'll see you in the next one.